bring in Ron DeVary now of Nuo Capital to talk a little bit more about what we might see today. And just to give some more context, when I say shady business practices, there was a lot of things going on, allegedly.
Sure.
Overcharging borrowers, leveraging fines if you paid early, making up names on different loan reports. And then there was these execs that apparently made these high-risk loans that, when they did, were invited into the President's Club and allowed to go on trips and things. Sounds good if you're in that situation, but maybe not if you're
well, you know,
customer.
the whole mortgage industry went essentially rewarding people on production as opposed to on quality of the credit. So,
has that changed?
I think it has. It's starting to first of all, well, it's changed because there is no production.
Right, well, maybe there's less people asking for loans. That, yeah.
Well, I think there's less loans being extended. That's for sure. But I think the incentive structure that existed did not really hold the producers accountable. So all they really cared, in order to meet their targets and be able to make their revenues, was to make sure that the loans get done. And so the people who have to underwrite those loans ended up really manipulating the data, and that's called exception underwriting. That means, you know, well, you know, you tell me, can you write me a note explaining this or explaining that? All of a sudden, you know, stated income, for example, loans where the income essentially was made up. People didn't have it, and therefore a lot of people then ended up defaulting on those loans and said, yeah, we couldn't afford these loans. And so I know they're coming back and saying that, oh yeah, the banks actually gave us a loan that we couldn't afford, but at the same time, they themselves made up the data to get those loans. And there were situations where you would have seen people actually erase the numbers. That, you know, the guy says, I'm making, you know, 50,000. He says, no, you're making 100,000.
And I can get you a better...
Get a better rate. And, you know, if you do this, I can do that.
Well, you know, one of the things that the Wall Street Journal points out this morning, as well as the Associated Press, is that people knew about this, not only in the market, but also regulators. And it just kind of kept going.
Well, everybody fell asleep at the wheel. The way I would say there were no...
Because so you're saying this is not exclusively Washington Mutual.
No, it was I believe that the reason is there were no policing going on. There was no internal audits. There were no... And the securitization market was used as an out. So as long as they were able to originate and sell the product into another channel, or in this case, Washington Mutual actually was collecting it on their own balance sheet as well, and producing earnings that were probably manufactured earnings.
Do you see anything?
They were not natural.
Do you see anything in the financial regulation reform that would stop this from happening? Stop the securitized market from again becoming a market where the value of something is tough to find? Well,
there is actually going to be a lot of reforms where the investors are going to demand actually a third-party verification of the borrower's information, a third-party validation where the data that goes into substantiating the credibility of the loan has to be, and also the servicing practice, for example. One of the things that people don't talk about today, we're seeing that the three major banks are going in, saying that balance reduction is
the principal
reduction. We're finding that the servicers today, because they're overwhelmed, they're not doing their duties because they're not getting paid for those services. So you're finding that a lot of the people don't even get the calls when they're not making their payments.
Right.
So the whole industry needs an oversight. And the oversight has to be external rather than internal, because you can't really have the fox really taking, looking over the hen house, because...
I won't take that personally. I mean, as a Fox business person, I won't. No, I'm just kidding, Ron.
No, I understand that.
I understand what you're saying, though. It's interesting. People thought we had that oversight, and that
no, I think the markets ended up being, the more, we were creating products in the U.S. and selling it in China. Believe me, a lot of Chinese banks are actually have exposure to subprime market in China, and then people thought, okay, those guys are not here to be able to check, the quality control, and the results was 3 or 4 years of run-up, and then the crisis.
All right. Well, hopefully we will prevent that from happening again. It'll be interesting hearing to watch today. Ron, thank you very much for getting up so early with us. We appreciate it.
Ashley, always a pleasure.
Well, we appreciate anyone getting up early in the morning, Ashley, right? I mean,